Okay, I don't know if anybody's seen what just happened here. The dollar was big going into 10 o'clock New York time. The jolts with the job openings numbers came out. They were lower, the lower end of expectations. And all of a sudden, bond yields dropped sharply and the dollar reversed course and spiked lower. Pure and simple is on the jobs number, because that's what the Fed is focusing on. It's focusing on jobs, and that's exactly what happened. So I will go through, first let's go through what's going on during the week, and then we'll look for a trade here. What's happened this week, we have the Fed on Wednesday, the ECB on Thursday, U.S. employment on Friday. You can see how sensitive the market is to news. Market expects the Fed to hike by 25 basis points and then signal a risk of a pause. Anything other than that would be a surprise. On the other side, we have the ECB. There's an odd chance they could hike by 50 basis points, likely stay hawkish no matter what, although the market seems to expect a 25 basis point hike. And you can see where the price action, how sensitive the market is to any hint or any information that may encourage the Fed to pause. Now, what I'd like to do today is discuss something I sent out in a video, the high and low of the day. I'll show you how it played out today and how the mood in the market changes. Now, this is something I use for trading. I hope you can add it to your trading mix, because what the market's going to do is set its bias by whether the high or low of the day is intact. Why? Well, the high of the day and low of the day are the two levels that almost everyone can agree upon. Just 1 second here, please. Okay. Why? Because everybody looks at the same charts. You may have different support or resistance within the day's range, but everybody looks at the high and low. And once that high or low is in, the mood of the market changes. Look over here. The low in the euro, and it was so tempting to buy in this range over here. The low for the euro was set over here. And you can see what happened. The market ran through it and got caught by the jolts number. It sent it sharply higher up into this AT line, actually. Point was, until this line was broken, the risk in the market was on the downside. Why? Because the high was too far away to trigger any stop. So when the market was trying to rally, it had nothing to go after. It was going to be met with selling. Now that we've taken out here, we can assume that this is probably the low of the day. Why? Just by this price action. So what does that mean? In this case, where the market was pressing to the downside and rallies were lacking steam, right now, if this low is in, then although we could back off here, odds are, unless we take out this low, the market will treat it as the low of the day, and you'll probably find bids within this area over here. So that's why when I open my platform, what I do is I set up the high and low of the day, pure and simple. I look at the range, and then I make a educated guess at that point whether one side or the other side is intact, meaning that if the market can't push to one side, it's going to probe the other side. And then I look for an AT ladder, which confirms what I'm looking at with the high and low of the day, and periods of range. So right now, I'll skip to other currencies in a second. But if you look at the euro dollar, for example, this is your high of the day, this is your low of the day. You see when the high of the day was, I think it's the high of the day. Yeah, when the high of the day was intact and it was below yesterday's low and below last week closing high. I mean, last week's, these resistance levels, put it that way. The market had nothing to go for in the upside. So when it started moving to the downside, and we don't know how far it's going to go. All we know it was going to probe to see if it could run stops. It ran stops below 109.63. It ran stops below 109.59, which was the overnight earlier intraday low. And then it ran it again below 109.47 until we finally found a bottom. So now we're sitting here, at least in the euro dollar. And we know for now, and I'm making this assumption, and this is how I trade, that the low for the day is likely in. And now, instead of pushing to the downside, trying to run stops, there are no stops left to run until we get here. So we take this out over here. And I hope you looked at the video that I sent out. I have a follow-up if you want it. Maybe I'll send that as well. And that gives you the logic behind what I'm saying. So here we're sitting here, we're within the day's range. But the change is if the market assumes this is the low, and unless it gets to this level, this is the low, the market will look somewhere in here to buy dips. And we'll look for an AT. I'll skip to a shorter term chart, some sort of HE support or a ladder line where we can buy. But right now we are just feeling the impact of this spike higher. Now, the currency that's most vulnerable, and it was offered beforehand, as stocks had fallen sharply and continue to fall after the JOLTS number. They're not reacting to lower interest rates. They're looking to a weaker economy, I guess, is dollar yen. It was dollar yen before the JOLTS number. Here's dollar yen after the JOLTS number. So we were all bullish on dollar yen. Interest rates are lower here. The 2-year, for example, is 4.05%. It was about 4.14, almost 4.15 earlier, and about 4.12 before the JOLTS came out. So that's dropped 7 basis points and knocked the socks out of the dollar. So this is dollar yen. What do we say in dollar yen? This is how I look at it. The high of the day is definitely in. Market's probing for the low of the day. So no matter how tempting it be for me, maybe to try to buy a low here, I am not. And it would be down all the way down here to what is that? 136.55. As long as the market keeps probing the downside, upticks are going to lack follow through, and the risk is going to be on downside. I am not looking to buy dollar yen. I'm not going to touch dollar yen. So I'm just going back to euro dollar, which is kind of my favorite here. I'll go to a 5-minute chart. And what we're looking for during this thing is, here is your first unconfirmed line in the euro. Let's see if it confirms. If it confirms, I won't call it a directional indicator, although it technically is. But we're going to wait and see if this confirms. So I'm just going to reiterate what I was saying before. And that is, for anybody coming in late, Didn't confirm it, by the way. And that's why we don't jump on unconfirmed lines. Right now, the market's reacting to weak stocks and a run for cover. But the point is, where is the risk in the market? And to me, I only care about what side I want to trade from. And then I look for an AT ladder pattern to try to get myself in a position where I see the risk less. What I mean by less risk? I mean the risk that the market's going to push for stops in that direction. And it all comes down once again to the high and low of the day. And you'll see me repeat this over and over. That is what I'm looking for. Where's the high and low of the day? And if the market can't push in one direction, it's going to lose interest and start probing the other side for stops. If you look here, there might be some right above this level over here in the euro dollar. We've yet to form even on a 5-minute chart. We tried an unconfirmed line, it didn't work. So I'm going to wait to see if we can get a line here. And then we will put on a trade. But let's go one step further. Let's go to a 15-minute chart. On a 15-minute chart, I would say this is your preceding line right over here. 975. Not really this one, but this is just coming like a down ladder. This would really be your preceding line. You could make this your preceding line. So unless we break any of these here, we're not quite into a bounce trade. But no matter what you do, your stop's got to be below the low of the day. So let's revert back to a 5-minute chart. I'm going to look at the euro dollar here and use my proof of concept that the downside is going to be limited unless we take out this level over here. Now I have a new account here. I've down leveraged here just to get it off the ground. You went to the SPX 500. Trading did not react to lower interest rates, it reacted to signs of any kind of economic weakness. And now I'm going back to the euro. If I put a buy in right here, I could put it below this level, which would take me out. I could put it below this level over here. Get myself somewhere around here for my stop. Okay, if I get a little dip in here, I'm going to buy. And the assumption that this line is going to confirm now. And to reiterate why am I looking to buy? Because unlike the market over here, which was probing to run stops below the low of the day in this case, now when you dip, you're probably going to find some bids. I'd like to get my target really below this level if I could. I'm not sure I can. Ideally, you'd like to put your stop below low of the day. That is the safest place to put one right now. As I said, I'm going to follow the theory that the downside is going to lack follow through unless it takes out this low over here. If I want staying power, I just put my stop below here. It's the low of the day. And that's what I call playing by the book and following the logic of what I said. Which, to reiterate, is there are no stops left to run on the downside unless we take out this low. And therefore, the downside is limited. Where it's limited, that really AT will tell you where it's limited. I'd like to see this line get confirmed. Okay, it got confirmed that I went long. As soon as this got confirmed, my stop is below the low of the day. Not an ideal position to get into as a level. I said it's a low leverage trade. And unless the low of the day is taken out, at least I won't get stopped out on the next tick. May even be something I could hold into Wednesday. I'm going to make a decision later. Yeah, I see we have some stragglers coming in. So I suggest going and looking at the video I made. And sent out. And I'm just going to reiterate my logic for a trade. Remember, the dollar was going up before. I'm just going to repeat. When the U.S. jolts, that's job openings came out, the dollar came down sharply, equities came down sharply, and yields came down sharply. The main key beneficiary has been the yen, which only is reacting as a safe haven, but also reacting to lower U.S. yields. And the approach I took, and I said I could always scale this position because I did a low leverage trade on it, is that once we found the low in the Eurodollar, the only thing we know is that the market is not going to approach stops on the downside until we reach this level. Therefore, on dips, likely you'll probably find buyers, which is very different from this episode to the downside, where the market was selling into weakness, trying to push the stops and push stops below the low of the day. And that's why the low of the day is most important. I'll reiterate it 100 times over, because that's where the key stops are. And why are the key stops there? Because those are the levels that everyone can agree on. So therefore, if you're going to a level where people might play stops, they'll place it above the low or the high of the day. And how the market reacts down there will give you an indication. Earlier, we had almost a triple bottom down here, but we had blue lines pointing down, and therefore it was premature to try to catch the low here, even though it was so tempting, because euro actually looked good at this point. And right now we're kind of in limbo here. If you can hold this line and build a third line, you can make a run at these levels here. And they said, I took it, played it by the book, put my stop below here. I want to have something on. But I much prefer to be buying down in here than where I bought. So we'll see how this plays out. But again, the rationale is I don't want to put it on positions where I'm going to get stopped out at the next tick. I want to put on positions where I think the market will be looking to buy a dip or sell a rally. And usually you see that with the amazing trades. So right now, even on a 15-minute chart, we have nothing. On a 5-minute chart, we do have technically a directional indicator, although these are pretty far apart distance-wise. So if this level can hold and you build a third line, we'll have that move to the upside. Now, if anybody has any questions, because we're in that period where all we know is the market is going to be extremely volatile, very choppy. You'll start with the ADP report tomorrow afternoon, tomorrow morning U.S. time. Then we're going to have the Fed. And what the market is hoping for is that the Fed will pause. Fed will pause, markets will react, and dollar will probably come down. And then you got the ECB on Thursday. The question is 25 or 50. Market seems to be leaning towards a 25 basis point rate hike, but they will probably remain hawkish. And then you got U.S. jobs, the employment report on Friday, and we're looking for a weaker report. And the market is most sensitive, and you can see it by the JOLTS number. And I can't remember when the JOLTS number ever gave a reaction to this. And JOLTS are job openings, but the Fed is focusing on employment along the banking crisis, which is tightening up labor, tightening up credit conditions. There is, a case to be made for the Fed pausing or indicating that they might pause. And that's what the market's looking for. So anyway, I put this position on. I could put my stop below here, which would give me a much tighter take profit. But I just told to make sure that I didn't get stopped out. I put it below here, and we'll see how it runs out. And that's it. That's the theory behind how I trade. And I'm trying to impart to you, identify where the risk is. You don't want to put on positions that if you call it wrong and it moves 3 points against you, you're out. Because the market is looking to sell, not buy. In other words, if you put a bid in and the market's pressing to the downside, you're just guessing at a bottom. If AT tells you that a potential bottom's in, then you make an educated guess. And if you're right, then the market will be on your side, buying dips if you're long or selling blips if you're short. And right now, we are looking for a third line here. It's still a 5-minute chart. 15-minute charts are not showing anything but move to the upside. We get a third line here. Often after a third line, we see an acceleration. Seem to have an acceleration off of this unconfirmed line. And now we got to take out this high here and see, maybe. Let's look at the 15 and I'll tell you why. In the 15, this probably is your key line over here. And if you could take out this line and this line, Guess what comes on the radar? Sorry, high of the day. So here's your key area right here. You got to take out this line here. Doing right now, that's kind of confirmation. That's confirmation of a that this episode to the downside is over. But now we got to take out this level over here, which I believe is around 109.84. I know we can do it. If it did it, then the high of the day becomes on the radar. And that's what the market will go after. Bond yields continue to fall without even looking. I bet you dollar yen it continues to fall. There we go. I have nothing to jump. If you're not in here, I can't chase this to the downside. But as the market continues to make new lows, I have no interest in buying at all. So let's go back to my euro dollar here. Let's go to the 50-minute chart. Taking out this level over here. This is possible. Hey, look at this. My take profit on this trade was 109.78.6. Told you it was a low leverage trade and I opened up this thing. We just hit my target. So we had a winning trade right here. All based on the logic that once the low was in, I was looking to buy. And I could have put a stop below here. I could have put a stop below here. I opted to put a stop below low of the day. And here, we're continuing up. This might have been a trade I could have held. But to me, this is more proof of concept. And the proof of concept is once the low of the day was in, I wanted to be long. And once this line got confirmed, I played a strict AT trade. Bought below low of the day. I bought with a stop below the low of the day. We got a third line. Look what happened. We accelerated to the upside. And this will be interesting to see what goes. Unfortunately, it's happening without me. Whether now that we've taken out these lines, is the 15-minute, let's see, 15-minute. It's the high of the day coming on the radar. That's the only line left on the upside. So having set the low, market's probing the upside. Only key level left here is on the upside here. And my target was hit, so I don't have a trade on right now. But I wanted to do it not only to show you a winning trade, I want to show you a proof of concept. Oops, sorry. Any questions here? Just be aware now, as as Michael said many times, embrace the retrace. I bought on a retracement. I bought on a retracement, and I knew the retracement would not go as far as I would like, for the simple reason that, again, the low of the day was in. But now I can't chase it. And if you look at what's going on, market's taking everything bearish. US yields have collapsed. Stocks are coming under sharp pressure on signs of a weaker economy, where normally they would have rallied on weaker yields. Key beneficiary is the yen, as I showed you. Commodity currencies, dollar Canada, for example, is firmer. The Aussies come off its high after the rate hike. And now we're coming into Fed time tomorrow. So I wish we had another retracement so I can go long. I said one of the reasons I put that position on the way I did is I was going to scale. As I said, I started this account just today for the first time, and I low leveraged just to get my feet wet on it. Turned out to be a good trade. So I'd love to see some questions here. But you saw the way I trade and the logic behind my trade, because all I care about is tell me what side to trade. Because what I hate more than anything is to put on a position and 2 minutes later, it runs through my position, I'm stopped out. I want something with staying power, and I want the market on my side. And I'm telling you, and it's a concept that may seem foreign to you. And I know I've mentioned it many times and probably not fully explained, because as a bank trader, it came instinctively to me. And I can't tell you why, but I know the market, and that's why AT lines are so amazing. The market will try to run stops, and wherever it can. Look at this. Look at these three blue lines. It's a ladder destroyed. It got destroyed. There are probably stops above here. Or those, this part right here and here, probably the bigger stop lines, and maybe here too. And the bigger ones are at the high and low of the day. And I said, just if you start thinking in those terms and looking for AT to confirm to you, you'll know what side at any point in time is more at risk. It may take work. You could ask questions on it, but it's a really good feeling. That trade I had just now, I never had a sweat, because I knew the market was on my side, and if it came down lower, I would have bought more. But when that line was confirmed, and I used the 5-minute chart because the 15-minute chart would have been too slow in this case. When that line was confirmed, I bought the next price. I executed right on the confirmation, and that is a pure AT trade. So let's do a little more proof of concept. I'm sticking with the euro dollar right now. Look what it's aiming for. Why would it go after here? Because there are any stops left, day stops left in the market, they're going to be above this level over here. Whether they can get to it or not is another story. I'll look at a 15-minute chart here. That's where we are. Let's see where the trend line comes from. So we've got this gap over here. One of the guys I know swears by the gap. The gaps always get filled. So there is a gap here. But here's your key line for the day. And you got a trend line too. So we're running into kind of a resistance area. but yields keep collapsing here in the US. And anybody wants to know where you could find yields, what I do is I go to CNBC. I use the 2-year yield. Luckily, we use the 10-year yield. I'll put in US, if I'm trading euro dollar, I'll put in US two year yield, CNBC, and I'll put in German 2-year yield, also with CNBC. So I can see how the differential between the two is moving. But in this case, US yields are dominating. And the 2 years now 3.95%, and that's over 16 basis points from when the JOLTS number came out. And I'm telling you, I've seen markets react now to data that used to be ignored. Empire, New York State, PMIs, the JOLTS data, but these have become key. Anything that hints of the Fed pausing and economic weakness in this case, market's going to react to. Shoot, time really flies here. So when you see me in the room, you're going to see me repeat the same thing over and over, maybe ad nauseum. When I walk in, I look at, I jot the range for the day down. I see if there are times when you'll see the high or low set, and when you have a good trend before the New York Open, and that tells you that the market's tilted the other way. And the beauty of what we're doing, if you can identify the side and then look for an AT pattern, as I did, to confirm, you could time it right and you got the market on your side. Because you want to be buying when the market's buying, and you want to be selling when the market's selling, and you don't have to outguess the market. AT will tell you with its ladder lines where the directional risk is in the market. I'm open to any questions here. I don't have. Oh, here's a good one, but I know you guys can focus on Canada yen. Watch this one. 15. We broke the preceding lines here, and let's go to a 4-hour chart. This would have been your preceding line on a 4-hour chart. We busted through it. You could have made this case maybe over here as well. That would have been your early warning sign when you broke through it. But dollar Canada is up against the US dollar, and dollar yen is sharply lower. And I'm telling you, it all comes down to interest rates. So if you're trading dollar yen, I'd just leave up US interest rates. You'll see if there are times it correlates, at times it doesn't. But when it does correlate, it gives you a clue. And again, I would not be looking to buy a falling bottom in dollar yen, because we don't know where the low for the day is. And if I can't determine what the low for the day is, especially using the Amazing Trader or the high, then I'm not going to look to pick a bottom or top, no matter how tempting it might be. Well, here's the euro. We came into this resistance zone, and it doesn't look like it wants to make a run at this high right now. But the day is still young. Given the opportunity, market's going to look to make a run here. Now, if you wanted to buy, you probably have to buy somewhere down in here, or wait for an AT line to form. So do me a favor. I sent out a video this week going over my my approach where I identify the side to trade using the high and low of the day. I added a second video to it So if you would like a copy of that, either email me or put it in the chat right now, and I'll send it afterwards, because I'm telling you, if you can follow my logic, and it may seem out of the box to you, but if you follow my logic, you will be trading on the right side of, I call it the right side of the market. You'll be trading with the market on your side. And I'm telling you, there's nothing better to put a trade on and never have to sweat, which was my case today. Are there any questions at all? If not, we're running pretty close to the hour, and I'm going to shut this down. But again, if you'd like a copy of my video, and I said, when you see me in the room, I am going to be repeating, I said ad nauseum, using that high and low of the day, determine what side is most at risk. And today was a good proof of concept. Okay. Oh, I got a question. Good. Just before. Great trade, Michael. Well, it's not Michael, it's Jay. But Michael does put on great trades. So I don't know, maybe when you hang around with somebody too long, your voice starts to sound the same. I won't tell Michael. He'll be offended by hearing my voice. That's okay. You're forgiven. That was me. But it actually turned out to be a good, not only a good trade, and a trade is just a trade, but it's the logic behind the trade that's more important. Because if you can repeat the trade or copy the logic and put it into a trade, then I've done a good job. All right, guys, once again, if you want a copy of that video where I had an addendum to it, please contact me. If not, I'm going to end the webinar now. And a recording is going to be in our YouTube channel.